Well, according to the AARP, the Earned Income Tax Credit was first enacted in 1975 as a small temporary provision. But it has since become, quote, the largest need-tested anti-poverty program that provides cash benefits. Now, the amount someone receives depends on their income and how many kids they have. People with no kids can still claim the credit, depending on how much they make, and as long as they're between 25 and 64. The AARP says lawmakers never clearly spelled out the specific reasons for this age policy, but an examination of their 1970s discourse suggests that age restrictions largely reflected attitudes of the time toward work, retirement, and age. The thought was work outside of that specific age window was more of a side activity. But as the age of workers continues to rise and more Americans are working past the age of 65, there are calls to remove that age cap. That cap has been removed before. The American Rescue Plan Act of 2021 removed it for that tax year. Then it went back into place the next year. The AARP estimates the removal of the age restriction would benefit around 1.3 million taxpayers nationwide. Since then, lawmakers on both sides of the aisle have introduced legislation that would change the policy. U.S. Reps Mike Carey and Danny K. Davis introduced the EITC for Older Workers Act. That bipartisan bill would eliminate the age cap, but it has never made it out of committee. And just this month, Senator Cory Booker announced the Keep Your Pay Act. One of the provisions of that bill would eliminate the age requirement entirely. Now, there was a provision in the One Big Beautiful bill that was passed last year that gives a new $6,000 deduction to people 65 and older. Now, that is dependent on income requirements. It runs from 2025 through 2028. If you have a good question, just email us. Goodquestion@WKYT.com. I'll see you on WKYT Mornings.